I want to highlight why position trading could be your key to long-term success. Why position trading could be your key to long-term success. Position trading is a long-term investment strategy where traders hold position for weeks, months, or even years, depending on their market outlook. So here are some advantages of position trading. This is a kind of long-term investment actually. So number one advantage is lower transaction cost. Lower transaction cost. Since position traders, hold their position for an extended periods, they typically make fewer trades, resulting in lower transaction costs and commissions compared to frequent trading styles like day trading or swing trading. When it comes to position trading, as I've earlier explained, you hold your stock for a long time, for months, and even for a year or so. And so for the fact that you don't really sell often, you have less transaction costs to pay. You have less transaction fees to pay, and so that will then reduce transaction costs overall. Number two is less time intensive. Less time intensive. So unlike active traders who need to monitor the market frequently, position traders require less time spent on daily market analysis, making it a suitable strategy for individuals who can't commit to full-time trading. Maybe you have a 9 to 5 and you cannot really have the time, sufficient time to commit to full-time trading. So you could adopt position trading. Simply buy your stock and then you hold it for a long time. You don't need to analyze the market frequently or consistently or constantly. Okay, so you have time to focus on your other activities. Number three is potential for larger profits. Potential for larger profits. By holding positions over longer periods, position traders have the opportunity to capitalize on significant price movements, allowing for larger profit compared to shorter term trading. When it comes to long-term investing, the longer the time horizon, the bigger, the higher the level of compounding. All right. If you hold the stock for 6 months, you may not have as much returns as holding the stock for maybe a year or two. All right. And so there's that potential for larger profit because you're holding these stocks for the long run, for the long haul. Number four is less stressful. It is less stressful. So position trading generally involve less daily volatility and short-term fluctuations, reducing the emotional stress that often accompanies more active trading styles. There's less stress because you don't get to trade often. Maybe you trade probably once or twice, or twice in a year, as the case may be. So the stress of having to the emotional attachment to the market is not there, which could be stressful indeed. Please like this video and subscribe to this channel if you've not done that. Number five is focus on long-term trends. Focus on long-term trends. So position traders focus on long-term trends rather than short-term market noise, which can help avoid getting caught in market fluctuations or reacting to irrelevant short-term events. So you are just long-term kind of minded investor. You have that particular long-term horizon, and so you're not really you're not moved by noise and short-term events and passing fads and fancies in the market. You are a long-term investor, and so these short-term occurrences in the market should not bother you. and you're not really you don't react to fluctuations in the market because you are focused on the long-term horizon. Number 6 is tax benefits. In major jurisdictions, long-term capital gains profit from position held for over a year are taxed at a lower rate than short-term gains, potentially offering tax advantages for position traders. What is called capital gain tax? The longer you hold your stock before selling, the lesser the capital gain tax, and the lower you hold your stocks as per duration, the higher the capital gain tax. And so in this particular case, it's tax benefit because you get to hold your position, you get to hold your stocks for over a year, and so you are taxed at a lower rate. It's a very important key benefit of position trading. And not only that, there's compounding gains. There's compounding gains. So by holding positions for extended periods, traders can benefit from compounding returns, particularly if the investment generates dividend or interest. You get to collect dividend, as the case may be, if it's a dividend generating company. And not only that, you get to compound over time. Someone said that compound interest is the eighth wonders of the world, and so you get to benefit from compound interest, and that compounding comes with time. All right, and so not only that, if you are patient enough, the more you leave the invest. I heard of a particular investor that held the stock of a company for 40 years. Imagine the level of compounding for 40 years. It's quite tremendous. Number 8 is flexibility in strategy. Flexibility in strategy. Position trading can be adapted to different types of assets, including stocks, bonds, commodities, and forex, providing flexibility for traders to diversify their portfolios. You can even use it for cryptocurrency as well. Simply buy and hold for the long term, for the long haul, maintain a long-term horizon. You will discover that and you will get to benefit at the end of the day. So it's flexible. It's applicable to almost all kinds of asset classes. So position trading is well suited for investors who are patient and willing to ride out market volatility for the potential of substantial long-term returns. That is it. So there's that long-term returns that awaits you if you are patient enough.